there anything in the risk ranges today that particularly jumped out at you, like any widening or narrowing, and people are for some reason focused on, maybe not for some reason, but focused on copper as an example. Low end of the range dropped from 4.55 to 4.36. Is there volatility related or?
Well, volatility goes up when things go vertical. Eventually, so the characteristics of a chart that goes like this. So if you have apologies for doing it red. But again, if you have the copper chart and it's going like this, and you get your consolidation period where you should have been buying the damn dip, right? Remember in March in copper, you had like a lot of that kind of action. But actually what was happening there in that consolidation signal was the risk range on copper was narrowing. That's when you buy it, like that. Just like Eddie Murphy. See the movie? You don't want to be Mortimer, right? Then the price starts to go like this. When it eventually goes like this, let's take that part out. Let's just say it goes like this. So the standard deviation of outcomes versus the prior volatility widens because it just went vertical, right? The standard deviation of outcomes when you have a look back on vol has to do with what it was doing here. Here, volatility was narrowing. Now it widens off its narrow point, but it's a big higher low. Like if you go to today, it's 436, but the prior top end of the range of copper wasn't even 436. Now again, what was resistance is now support, and you have a big step-off letter. So again, no, I wouldn't make anything other than that. Today is a great selling opportunity in copper and Freeport-McMoRan. Both are right at the top end of the risk range.
Okay.
And it's not because of how the question was answered. Mathematically, I think everybody should understand this. I'm finding my inner self, like Laura said. Just have more patience. Most people do this and they don't do math, Keith. Which is kind of crazy, actually really fucking crazy when you think about it. You're a market expert and you don't do math? Huh? You do milkshakes and magic? Like, what do you do? So I am going to have more patience with this because to me, when I look at markets and I look at math, something like consolidation signals and narrowing volatility, narrowing risk ranges, and then an explosion to the upside in price and the commensurate widening of vol, that's like, God willing, waking up with 2 feet on the floor every morning. That's embedded in, it's like 2 skates on before you get on the ice. That's like no known type shit.